Hello, my name is Lauren Goodwin, Chief Market Strategist at New York Life Investments, and I'm here to bring you the U.S. Chronicles, a U.S. perspective on the election results that have just come in. It's about noon on November 6th, the day just after the U.S. election, and Trump has very clearly won the presidency. Though full control of Congress may not be known for a couple of days, the result is highly investable. So here's a bit of how we see the election results and investor outcomes. First, tackling the results. Donald Trump has very clearly won the presidency with not just the Electoral College vote, but also likely the popular vote. And that detail is important because it provides a mandate, making it less likely that any legal challenges related to the sentencing in his hush money trial, which were due for next week, November 12th, would impede his path to presidency. So it looks very likely that Donald Trump will be in office in January. In the Senate, Republicans have also won control there, but their margin is uncertain. As of right now, Republicans have control of 52 seats, but 6 seats, 3 of which are contested, remain uncalled. And Republicans' margin of control in the Senate matters because if they had, for example, a 55-seat majority instead of a 52-seat majority, centrist or vulnerable senators, those, for example, who are running for re-election in 2026, would have less influence on holding up the legislative agenda. So control margin in the Senate matters. Finally, looking at the House of Representatives, it's unlikely that we'll know who controls the House for another day or two. Republicans did not perform as well as expected in some areas, but Trump's winning the popular vote does make it marginally more likely that Republicans will keep control of the House. The threshold for control is 218 seats, and it appears that the maximum Republicans could hold is 220, which is a thin margin. So what does this mean for investments? I mentioned this before, but even without knowing control of the House, this election result is already highly investable. Why? Several of the key areas of potential policy change, like trade and immigration and regulation, those are likely to be enacted by executive orders and they don't require Congress. And so there are a few areas where we expect we may see market moves in the coming days. On trade, for example, higher tariffs on China are more likely. Universal tariffs, including on Europe, are likely to gain headline risk, but less likely in our view to be used unless it was potentially a negotiating tactic. They're just too clear of an impact to inflation there. In the near term, the impact of these tariffs is likely to be dollar positive or look for a stronger dollar. On immigration, the US southern border is likely to be shut down as soon as Trump takes office. In his first term, the Trump administration curbed funding of legal immigration and visas processing, including student visas as well. Tighter immigration amid a still hot labor market in the US could result in higher labor costs. And finally, regulation. New regulation has already become more challenging as a result of the Chevron deference Supreme Court decision made earlier this year, but we expect that the Trump administration could move in the direction of removing or relaxing enforcement of existing regulations. That could result in lighter bank regulation and lighter energy regulation, such as the rolling back of emission standards for LNG exports. Now, just tackling before we go a couple of common client questions. First, treasury yields. Because we don't know who is in control of Congress yet, we have less certainty on tax and budget-driven market factors at this time, and we'll report back once we know. But those expectations for spending, growth, inflation, and rates, we really won't know until the full makeup of Congress is known. And as the red sweep has become more likely, we have seen Treasury yields on the longer end move higher. So we'll be reporting in on this. Regardless of congressional makeup, though, we expect the Trump administration to move quickly on the renewal of the 2017 Tax Cuts and Jobs Act as a part of budget negotiations. Clients also often ask us about the Inflation Reduction Act and which aspects of the Inflation Reduction Act are most at risk. We don't believe there will be a major rollback of this policy. It was passed with support of 17 Republicans and has potentially gained support since then, thanks to Inflation Reduction Act spending in red states. By our estimates, nearly 65% of spending has been levied in Republican-controlled counties. And so there will certainly be headline risk related to the Inflation Reduction Act, but we expect that only a few targeted items, like subsidies for electric vehicles or offshore wind power, could be rolled back. Once we have a stronger sense of the full control of Congress, we'll report back on the U.S. Chronicles for the election. Take care.